Welcome to the Setup Structure segment of Stock Trading Ninja. I'm your instructor, Frank Bunn. The focus of this training segment will be to build on tools learned in the Advanced Tactics and Strategies lecture, and our objective is to increase the probability of an immediate breakout, create a filter to sort the highest probability setups, reduce setup and intrinsic risk, give the trader increased confidence, avoid more breakout failures, and detail an easy visual trade management tool. Setup structure derives from three main areas. The first is intrinsic risk. That is, the entry pattern should be bouncing off long-term support for a long entry or resistance for shorts. Next is the price action pattern itself, with extended patterns or patterns with reversals. And the last area is pattern resistance. That is the resistance between your setup entry, which is the pullback, and the swing high or low breakout, whether it be over or under your entry price. So in order to better filter entries, we would first want to manage intrinsic risk by looking at long-term exponential moving average support or resistance that coincides with the pattern, or look at the price action pattern itself, focusing on 3 to 4 bar continuation patterns as you can see here in the chart graphic. Or third, taking a look at pattern resistance, focusing on broken price action patterns or setups with no resistance at entry. This will be the focus of this training segment. The technical tool required for this type of setup structure is the trend line, and you will need a chart program with the proper drawing tool capability, scalable charts that permit attention to detail, and a price magnet to precisely anchor trend lines at the proper places. The procedure for using trend lines requires two specific lines. The first is the trend line itself moving in the direction of the trend. This line connects the most recent pivot point to the pattern high or low. The next is the counter trend line, which moves against the setup pattern and connects the swing high or swing low point to the very next interval. And in order to best employ the setup structure with trend lines, we must have a lower low in the reaction pattern for long trades, and we must have a higher high in the reaction pattern for shorts. Here is a graphic which details the procedure for using trend lines. We first identify the swing high pattern as seen here, then watch the price action evolve. Once we have the next interval high, we connect the counter trend line from the high of the swing high to the high of the next interval high. Following this, we will wait for a pattern low to evolve and attach a trend line from the most recent pivot low to the expected low of the pattern as seen here. Once the counter trend line breaks, we have an entry trigger. Trades are then entered according to the Stock Trading Ninja plan. Here's an example of a long trend line setup with the counter trend line and the trend lines in place, following the swing high pattern. Here's a short example. First we see the swing low as detailed here in the chart, followed by the counter trend line and the trend lines. Remember, there are two lines. The first in the direction of the trend, this is the trend line, connecting the most recent pivot to the pattern high or low. And also the counter trend line, which moves against the setup pattern. This connects the swing high or swing low to the next interval. Remember also that we must have a lower low in the reaction pattern for longs and a higher high in the reaction patterns for shorts, as you can see here. Also take note how the green trend line guides price action after the setup breaks out. The rules for using trend lines are relatively straightforward. The counter trend must be broken at the setup. This can either be a closing break at the interval which breaks the trend line, or a subsequent interval that opens having broken the trend line. We will see examples of this in just a moment. Furthermore, the trend line must contain price. That is, the open and close of subsequent intervals must be on the proper side of the trend line. Also, the trend line should guide the trade, as the trend line continues to contain future prices. This is the trade management tool. In this example, we see an evolution of a swing high MACD signal line pattern, followed by a counter trend line which connects the swing high to the next interval high as seen here. Our trend line connects the last pivot low to the pattern low as seen here, producing an entry. In this example, we see the evolution of a swing high pattern at point A. The counter trend line connects the swing high to the next interval high, and the trend line connects the last pivot low to the low in the pattern as denoted by the green bar. Notice here, however, that the counter trend line is broken at the entry bar open. This qualifies as a broken trend line pattern. In this example, we see the evolution of a swing low, the specific trend line structure with the counter trend line and the trend line, and we can also see that the counter trend line is broken at the entry bar open. Remember that you must have a precise drawing tool which magnetically attaches trend lines to the proper highs and lows. Here you can see an example with the small circles that magnetically attach the lines to price for precision. Also notice how the trend line guides the trade and contains future price action. Here's an example of how this trend line structure can reduce breakout failure. Notice that the entry interval, denoted by the white arrow, after the trigger bar at point C opens below the counter trend line and also below the trend line. Also notice that the point C breakout fails and the pattern enters an extended consolidation. Using this trend line structure, you can avoid these types of breakouts. Let's take a look at exactly how a trade can evolve from the hard right edge. First, the swing low pattern evolves at point A in this short entry on the MACD signal line system. Next, our counter trend line is drawn from the low of point A to the low of the prospective trigger bar. After this, a trend line is drawn from the most recent high to the high of the trigger bar. After this, the trader perceives an entry when the price breaks the counter trend line at the open of the next interval, and the trade is triggered short several pennies below the low of the red trigger bar. Trade confirmation is received when the breakout trades below the swing low at point A. So let's take a look at what you can do next. First, ensure you have functional chart tools. Master the trend line procedure and integrate the principles learned in the Advanced Tactics and Strategies lecture with this trend line setup structure. After this, you want to create a trade plan with maximum specificity in terms of your system and setup structure. Begin to sample trades in groups of 10 to 20 transactions and learn to win 9 out of 10 trades. And remember, do not risk capital until you have a profitable flow. Having the proper hardware and technology to trade, in addition to fast, flexible chart tools which facilitate precise tactical analysis, is integral to your trading career. This concludes the setup structure of Stock Trading Ninja. Look for more strategies and tactics to improve your edge in the near future. I'm your instructor, Frank Bunn.